And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And a bit of a wobbly market. We will talk about that. As far as the broader markets, participation was rather thin, but where there was movement, pretty active. So we're going to get into all of that with an eye toward next week and beyond, as always. First up, some of that economic data that drove price action last week, it was all about inflation. So earlier in the week, we did get CPI, Consumer Price Index numbers, that came in at estimates, and the markets liked that. It really gave investors and traders a sense that at next week's FOMC meeting, we may very well see a rate cut. Also coming up next week, we are going to get retail sales, housing data, Q3 GDP estimates, and some more inflation data, and that is PCE, personal consumption expenditures, and that's due out on Friday. But at the end of the day, this week, we also did get PPI data that came in relatively modest, so that was cheered as well, but not all was well beneath the surface. So we are, again, going to go ahead and take a look at that. Let's begin by taking a look at the S&P 500 and see where we closed the week. And here we are, a daily price chart of the S&P, and you can see that we were up very slightly. We did manage to close back above that green 10-day simple moving average. We have a positive RSI and a positive MACD, so we are still in a confirmed uptrend. Now, of note, I will share with you the equal weighted S&P 500, and this chart is giving each name, of course, as stated, an equal weighting. So you're not getting that M7 dominance. And we can see that we did pull back here on that index, down 1.6% relative to the broader S&P 500, which was down 0.6%. So net, not that broad participation that we ideally would like to see to give you a sense of a continuation rally having stronger momentum. So let's go ahead from here and take a look at the underlying 11 sectors in the S&P 500, and only 3 sectors outperformed the S&P 500. From there, we did see weakness either relative with the markets or quite a bit weaker. So let's take a look at some of these stronger areas up here at the forefront. XLY, this is consumer discretionary. And I will tell you that Tesla and Amazon's move this week, more so with Tesla, really gave this sector a boost. There are some bright spots outside of that, but it is right now the strongest relative outperformer in the broader markets. Next up is XLC, and this is going to be all about Alphabet. Google coming in with good AI-related news. The stock faring really quite well this week, but there were other pockets of strength there as well. I believe I have one name in each of those sectors that we can take a closer look at. And technology. Now, this is where we started to get areas that underperformed the broader markets. XLK was down about 0.7%, but we are in a bullish mode here with this sector up here above this 10-day simple moving average. However, your momentum is flat. Now, that said, there are definite pockets of strength, but not all areas are participating. We'll get into that in our next segment here. But from here, we do want to take a look at some of those areas that are continuing to decline. This is the industrial sector, XLI. The group was down 2.2%. We now have a negative MACD that is also marrying this negative RSI, so that downside momentum still very much in place. Pretty big volume here. I'm going to share with you one of several dynamics that are hurting the industrial sector. And then also, as we move through taking a look at other areas of weakness, you will see that utilities, once the winners in the beginning of the year, and then here more recently in November, again falling. XLU is down 2.6%. We do now have that negative MACD, negative RSI. So certainly we will be keeping an eye out for that downtrend reversal as a possibility going forward, using this May and November period as precedent as for the characteristics you'll want to see. And this is certainly true of stocks that have pulled back as well. Also down here in this lower quartile, healthcare continuing to struggle. You can see that it had this downtrend reversal attempt. It did falter, and the group overall down 2.3% this week. So this has been a very tough area, some of it due to political, as far as Trump's assignment of the new healthcare head, and then also UNH, a big heavyweight in not only the Dow, but certainly in this sector, also getting hit last week as well. Now, from here, we're going to drill down further beyond these broader sectors and take a look at some of the industry groups that are a big part of those sectors. And for me, it is going to have a little more of a growth bend as it may. It's an area that I tend to focus on. So from here, let's go ahead and take a look at this same 2-month daily price chart view, sorted by that RSI. And here we are at the forefront. Now, the Nasdaq actually was up 0.3% for the week. However, the Nasdaq 100 index, equal weighted, was down 1.6%. But let's take a look at the daily chart of the Nasdaq. We did get back up above that 20,000. Lots of investors like those round numbers. We closed just below that, but that uptrend still very much in place, and this index certainly due a bit of a pullback. Now, from here, as we move through, we can take a look at some of these other areas. TNX is the yield on that 10-year treasury, and it did jump certainly toward the end of the week. Ideally, not what we want to see. It is now trading at about 4.4. Some of the most immediately impacted areas are going to be small cap and home builders, and then some areas of growth. So we're keeping an eye on that going into next week's FOMC meeting. Also up here at the forefront, you can see other areas that fared okay. This is a retail ETF, the S&P 500, and it was down about 0.4, a little less than 0.5%. And as we move through, as always, in addition to being aware of areas that are up here at the forefront, really retail being one of the only standouts, you do also want to be aware of areas that are pulling back a little. Software still very close to this high that was hit last week. However, the overall industry group did pull back this week, not entirely out of line, but it was down almost 4%. So going to keep an eye on that because we did see high volume on those sell-off days. I'll share with you 2 reasons why software, among others, was down last week. And first up, Adobe came out with their earnings earlier this week. You can see this gap down and then another trade further today. So this is a heavyweight, very closely watched, another well-known AI related at some point name that reported earnings this week that also faltered in response to results. Markets and analysts, when you get these stocks that are priced for perfection up here, they expect the numbers to be perfect, and in particular, the outlook going forward. And that was what really got Adobe. It was weaker than anticipated. And then from there, you often see other names in tandem, given the weak outlook, falter as well. Also taking a look at these industry groups, let's take a look at an area that has been in the news quite a bit, certainly today, and I do need to update this chart, but this is the semiconductor ETF, SOXX, and today it was up a nice 3%, all about Broadcom rallying over 22% on the day. Superior outlook on their AI related chips going into 2026. We can take a quick look at the stock here. And this is Broadcom's gap up, actually up 24% into a base breakout, super high volume. I would suggest further upside ahead for that name. But looking at SOXX, it is a divided industry group where you have your haves and have-nots such as Broadcom and other AI-related chip manufacturers. Now, moving through, of course, you do want to be aware of those areas that are exhibiting a little bit of weakness. I talked about small caps. They were down 2.5%. This is that Russell 2000 index. We're back in negative territory with that RSI and a negative trending MACD. Also, as we move through some of these weaker areas, you'll see that the healthcare medical products is also pulling back. This is IHI, that medical devices. It was down about 1% on the week, but really continuing to deteriorate here is IBB. And I did fail to mention, but this is another area that will falter when interest rates rise. A lot of these companies are continuing to raise funding so that they can expand their research and development, and that higher interest rate environment is not constructive. There are other reasons as well. I believe we will get into that as we move through. But first up, I did want to share with you that equal weighted performance and outperformance. Let's take a look at those M7 names. And you'll see up here at the forefront, this is based on that relative strength, sort with the stronger areas up here at the forefront, and then we will get into NVIDIA here as well. So taking a look up here, I did mention Tesla outsized performance, 12% gain on the day, and you can see it's up here at, let's go ahead and pull up a weekly chart to confirm that in fact it is at a new high after this week's really expansive move higher. And then also among these M7 names, I did mention that Amazon fared well. Actually, it did end the week flat, so not quite as strong there. But let's take a look at Alphabet. Here's a name that was up almost 9% on the week. We did get that gap up. Now, from here, we are seeing a pullback after the stock did get into an overbought position. So I'm going to be adding this 5-day simple moving average. This is that blue line. So if you go back historically and look at periods when Alphabet really takes off, you'll see that that 5-day is a common area where it will pull back to. If you are interested in entering the stock, I would use that as your guide for a pullback buying opportunity. And also we do want to take a look at NVIDIA because we did see AI related chips and we talked about Broadcom, but NVIDIA was down over 5.5%. We are below this key 50-day simple moving average. We have a negative RSI, and now we have a negative MACD after this week's weakness. So for those of you that are holding the stock, I would not be a buyer on this pullback. We can take a look at the weekly chart on NVIDIA. Here's that 5.8% decline this week, and the weekly chart indicates that you can stay with the stock if you are a longer term investor. We have this RSI still up here above that net neutral 50. Although we do have a downward trending MACD, we are still up here in positive territory. So short-term versus long-term view of NVIDIA. So last week, we did see a number of names, high growth, that really pulled back earlier in the week, Monday and Tuesday in particular, before we came out with that rather benign inflation data on Wednesday. So what one may be interested in doing is taking a look at some of those really faster moving names that pulled back with an eye toward an opportunity on the pullback. So what I've done here, this is the Nasdaq 100 members. It's a list that you can very easily access here on Stockcharts. And of those 100 names, I've gone ahead and added that relative strength indicator and sorted the Nasdaq 100 names strength to weakness. So up here, of course, we do have Broadcom and Tesla here at the forefront. But in talking about pullbacks, let's take a quick look at Lululemon. They did come out with very good numbers, had that gap up, and it did get overbought. So we are seeing that pullback. I'm going to go ahead and add that 5-day simple moving average and update the chart. And you can see that we are just dipping below that. But what you really want to center on is the low of that gap up. If we do descend below that, that would be a failed gap up but at this point we are still sitting up there quite nicely. So as what you can do from here is move through and take a look. Here we are. Marvell did have a nice 2-week base breakout in line with Broadcom's numbers, but I'm on the lookout for stocks that have recently reported, have gapped up, and are pulling back. So here we are with DocuSign. They are a software company, and this, you can see that we are now below this gap up low for the day. So I'm not going to be quite as interested in this particular stock. We're going to go ahead and move through and take a look at some of these other names that have pulled back and could be a little more interesting. I actually have a list rather than giving everyone a headache as we move through. But while we're here, I will share with you those names in the Nasdaq 100 that are down and out. And what you will see are a number of transports. Here's CSX, a rail stock. ODFL, of course, is a trucking stock. We talked about Adobe, but let's take a look at these heavyweight biotech names, because in addition to high interest rates, you have heavyweights such as Amazon down and out. And then the lowest rated on that relative strength is Biogen, continuing to struggle. So let's take a look at a couple of these buy on the pullback possibilities. And I will share with you PWR. This is Quanta Services. And you can see this is an industrial name. So it did pull back with industrials last week and even further, but it did find support at this 50-day simple moving average. I'll point out some other characteristics that make it compelling to me. And that is that we did, in regaining this move, we did close back above this 10 and 21-day simple moving average, got this RSI into positive territory. Now that is all good news. The last piece here ideally is, let's get that MACD black line up through the red to signal a new uptrend. Another name that we can take a look at as it relates to pullbacks, and again, I'm centering in on those names that have had and been big winners. This is a stock that I happen to own. It is Bloom Energy, all about AI related activity. And we can see after this huge gain, the stock has pulled back to this 21-day simple moving average. Again, I am going to need to see it get back up above that 10-day and ideally see it take shape on heavy volume, because the stock certainly has had a very sharp advance. Another name that we can take a look at, a big year-to-date winner in that restaurant space, is EAT. And not as exciting, but what we can see is a pullback to this 21-day simple moving average, a needed period of consolidation after this lengthy overbought condition. So what I will need to see is this MACD black line up through the red. From here, I'm anticipating further sideways price action, but it is worth keeping on your radar. Another name in the software space, NOW. It is still very close to its new high in price, but we did get that nice pullback to its 10-day simple moving average today. Now, I did talk about industrial stocks pulling back, and there was one of many factors. First up is the fact that Boeing, let's take a look at Boeing. They did announce that they are going to be putting $1 billion toward the production of their Dreamliner aircraft, and they are going to ramp up so that they are anticipating producing 10 over a near-term period, and that's pretty aggressive. So you can see Boeing is in the throes of a potential downtrend reversal. I will want to see it close back up above that 200-day. We have a bullish RSI and MACD. Now from here, when you have that type of news, you will see stocks that are related that did well while Boeing was experiencing a strike and lots by way of deterioration. We did see these aircraft part leasing companies fare really quite well. This is FTAI Aviation. And then on that Boeing news, we are now in a downtrend. This was a big winner for us this year, but it is currently in a downtrend. Another is GE Aerospace, which also leases aircraft parts. So that's the kind of news that really can be helpful as far as outlining areas that are going to benefit and those that are going to, if you are someone who uses options or shorts the market, you will be interested in that. And then also we have seen a move lower in defense-related stocks because Trump's initiatives and the fact that Elon Musk is going to be heading the defense-related activities. We are seeing that group, which is part of industrials, and I'm sharing with you now ways that you can get in front of some of these names. So we do have aerospace, and then as we move through, we do have defense-related stocks. And then from here, I like to sort this by market cap. And I want to really key in on stocks, for instance, this week, and you'll see a lot of red over the last month. But let's just take a quick look over the last week, sort it by that market cap and some of these bigger names that are pulling back in this defense-related area, all very politically and news-driven. That's it for this week. I hope you have a great weekend, and I'm going to look for you here again next week.